Yes, good morning, ladies and gentlemen, and welcome to today's webinar. Today's webinar is on bookkeeping, and we thank you for rejoining us. As we indicated last Friday, we had some technical issues, and so we couldn't make it. And so we thank you for joining us for today's webinar. I guess there are still a few more to join, so give ourselves a minute or two whilst others join. And those of you who are joining, we welcome you all to today's webinar on bookkeeping, where we'll take participants through the importance and key messages of bookkeeping. Our main resource person is Kwame Achekum, as you see him on the screen, and Kwame will take us through all the key elements that we have to adhere to, we have to put into practice to make our businesses worthwhile. We have 100 registered participants. So far we have 14 joining. I guess the others are joining, so let's give ourselves a minute or two to get some critical numbers, and then we can start so that those who join us will not lose a lot of information. Those of you who are also joining us, we also remind you that we've also advertised for a webinar on Friday on good manufacturing practices, GMPs, for our processing or our production units. So please, if those of you are interested, you can please register and join us for that. You could also share the word, spread the word to other colleagues far and near about that. Then also for the various associations and networks, on Thursday, 2nd July, we're also having a webinar, a presentation on the subcontracting matching grant, a second call. So please also get registered. Encourage your executives, the associations, because it's more for networks and associations rather than for individual companies or enterprises. So it's about providing services to your members. So also get ready, and then we can move on in that space. For those of you who are joining, we would also want to tell you about WACOMP, what we do. So WACOMP is a West Africa competitiveness program. It's funded by the European Union, and in Ghana, it's implemented by UNIDO. All across West Africa, EU is funding the WACOMP project. So it's everywhere in West Africa, all the 16 member states. In Ghana, our three main value chains are cosmetics and personal care products, cassava and its derivatives, fruits, we're working mainly on mango and pineapple. The main objective of the program is to help improve the competitiveness of Ghanaian exports, to improve all that we do, make sure we're able to add value, put products in the right frame that can be marketed across the West African market and also the international markets. So we working throughout the country, working with groups, working with associations. So any cosmetic production in any corner, we encourage you to get closer to us. We will look out for you, and then we can all work and make the productions well. We're looking at competitiveness, where we helping associations to work together to be able to produce their products, work to enhance the volume of products that they sell on the domestic or the international market. We're also looking at conformity, looking at quality standards, both at the national regulatory level and also at the level of the producers, making sure we put in good manufacturing practices, have the right certification, have the right registration from FDA and GSA. Then our fourth C, we're looking at connectivity. How can we sell our products? Because whatever we produce, we must sell. We either connect on the domestic market or also the regional and international markets. And then fifth C, we're talking about credit. That's what I earlier on mentioned, that we're going to have a proposal presentation on the subcontracting matching scheme, where members will get to know that those associations that have production together would want to source for a common machinery or improve on some practices within their operations. They can apply for the subcontracting matching scheme up to a maximum of 40,000 euros. UNIDO or WACOMP would support up to 80%, and we expect the applicants or the bidders to also supply or fund co-finance up to 20%. We encourage as many associations as possible to be able to apply to this. I think at this stage we would kickstart. We have 20 members who have so far joined. Like I said, we have over 100. But as we wait for the others, I try to take some time off to engage. So we would now move into business. Today's webinar, as I have said, is on bookkeeping. And basically, we would be going through the key tenets of bookkeeping. By the end of this webinar, all attendees will get to know the importance of having a sound or financial system in your company. What do you have to do to make sure that your finances are right, your bookkeeping is up to date, so that you'll be able to work on all things. At the end of the webinar, you should also be able to know how to record your financial transactions. So Kwame will take us through this aspect also. We would also want to know the different types of financial bookkeeping or types of budgets that would also be done by Kwame. And then also, we would get to know the different components of bookkeeping. Some talk of assets, some talk of liabilities, some say revenue, some say expenditure and equity. What are all these words for, and how do they come into play in our record keeping? Kwame would take time and explain these processes to us so that we would be able to relate to this bit. Now we would have a short poll, and the poll would give us a fair idea of who is here and what our appreciation is about bookkeeping before Kwame launches. So on your screen, the poll is up. Please take time and vote. And then right after, we have 3 questions. Right after that, we will delve into the whole answer. So the first question is, how familiar are you with bookkeeping and finance? The options are, I have studied it in the school or university. Finance and bookkeeping have no secrets for me. I have some notions and consolidated them through daily work. I am a beginner. One option for you. Then who takes care of the bookkeeping in your company? Do you do it yourself? So I do it myself. I have a dedicated staff member. I subcontract outside my company. So that's also an option for you to tell us. It gives us an idea, it gives Kwame, so we know how to tailor the presentation. And in which sector are you operating? We want to know the sector that you're coming from. Is it fruits? Is it mango, pineapple? Is it cassava industry? Is it cosmetics and personal care, fruits and beverage, service, textile, and others? So please go and treat everybody, all those on, kindly answer this for us before we kickstart the presentation. Thank you very much as we wait for your responses. So far we have 22 people, so at least I expect that all 22 would have would answer before we end the session. Thank you for taking time to answer this for us. Okay, so 13 out of 22 have answered. Okay, so this is what we have. So how familiar are you with bookkeeping? 40% are saying they've studied it in school. 27% are saying that, well, they have some notions and consolidated it. 33%, they are beginners. Who takes care of bookkeeping? So 80%, vast majority do it themselves, 20% dedicated staff. And then for the categories or the sector that we operate in, we have 47, almost half coming from cosmetics, 33 others, and then the fruits. For our pineapple and mango, we have 20%. So it gives us a fair idea who we have and the actors we have. Thank you very much for taking time to respond to the poll for us. So on this note, I humbly now invite our resource person for the day is Kwame Ajekum. Kwame has a vast experience in terms of finance. He's been in the financial sector before. He's worked experience in a bank, a number of banks. He's also worked with AGI, also with a lot of SMEs as a business operation officer in AGI. He's now working, bringing his experience on board the WACOMP team, supporting us in issues on finance. So today, Kwame, having had this area and this wide experience with SMEs, would share what he has for us. So Kwame, your audience, and then we wish you all the best. Thank you very much.
Thank you, Charles, and good morning to everyone. Trust that everyone is well, doing well, and you are welcome to the webinar on bookkeeping. The results of the poll, I'd say, are very interesting. 40% saying they've studied about bookkeeping before. And then you have about 33 saying they are beginners in bookkeeping, and 27% saying they have some notion on bookkeeping. Now, looking at question 2, it's understandable that most of us are SMEs. So it's understandable that 80% of us are saying that we handle bookkeeping ourselves because many are not in the position to employ and engage a full-time staff with the experience and expertise in bookkeeping. I mean, that is what happens in a lot of SMEs. The owner is the production supervisor, is the marketer, is the finance person, plays a lot of roles. And so that is why at UNIDO WACOMP, with support from the EU, we thought it necessary to have this webinar on bookkeeping. Now, I want to start with just some research, show you some research that has been done about bookkeeping. And this is even a research conducted in the United States of America, the US. It says that 50% of small businesses fail within 5 years, and only 10% survive within about 10 years. 30% survive within about 10 years or so. And then at the end of the research, this was a doctoral dissertation someone did by Zimmerman, Joe. This is one of the findings, that small owners do not always have the expertise to manage the financial aspects of their businesses. And the specific business problem is that some small business owners lack bookkeeping strategies to sustain business growth over time. So you can see that this is a major problem for small businesses all over the world. And you see this happening, a study that was conducted even in the US. And I can imagine it is even more so here in Ghana. So when we say bookkeeping, what comes to mind? I'm sure this picture here says a lot. Immediately, many of us start thinking bookkeeping, we are looking at and thinking of a stack of papers and files and plenty papers to be dealt with. And so immediately we lose heart and then we discourage, we say, this is not for me. But then as we go through the webinar today, we would see why we need to dedicate time and understand bookkeeping. And we would see that it is something that if we pay some attention to, we can do it, we can handle, we are able to handle it. Now, sorry, screen, once this freeze. Just a moment, please. All right, so what are the various components we'll be looking at and discussing today? We'll be looking at record keeping as part of bookkeeping. We'll be looking at the budgets, and then income statement, and then the balance sheet. You'll find out that these are not things that are so complicated to understand. Balance sheets, looking at your assets, your liabilities, and then the cash flow of the business, how money flows within your business, money coming in and money going out. We would understand these various components of bookkeeping and how to handle them. The next slide. So we'll go first with record keeping. Now on record keeping, let's look at these images. First, let's look at the image to the left. You would see interestingly here that imagine this is your business, and this happens in a lot of small to medium businesses, micro businesses. The person says that we had many customers today, but there is very little money in the cash box. So you see business is going on, you are trading, you are selling your products, you will get a lot of customers in coming to buy, but then there is little money there at the end of the day. And sometimes you wonder, why is that so? Why is that happening? Then the owner of the business says, have you forgotten that we paid some suppliers today? You see the problem of bookkeeping, because records are not being kept. So money has come in, but the money that went out by paying supplies, those were not recorded. And so the person at the end of the day, your person you are working with in your business, your company, then you're wondering sometimes, why is it that I seem to have many customers, but then there is little money to show for it? This is due to the absence of bookkeeping. Now, when you go to the right and you look at the picture there as well, imagine this is your storefront again as well. A customer comes, and the customer, you tell the customer, you owe us $32, 32 cedis, a certain amount of money. And the customer says, no, I owe you only 25, and I can pay at the end of the month. You know, this can degenerate into a big confrontation, whereby you could end up losing valuable customers just because of the issue of record keeping. If there was some kind of record when the customer bought the product, what quantity the customer purchased, what amount it was sold to the customer, what payments the customer made, if there is any balance, that balance showing. But sometimes, because we are just excited about doing the business, we forget to take these records. And then later you have these disputes coming up where you say the customer owes this, the customer says, no, this is rather what I owe. And it can be a very thorny issue. You look at the third picture at the bottom of the screen. Here you are, maybe you approach your bankers that you need some support and you are looking for the bank to help you with it. And you say, like, imagine you are doing fruits, pineapple or mango, and you are processing it, or you have the mango, you want to preserve it. So I need a freezer to be able to store the products. And you say, well, I'll be able to repay the loan in 6 months. The banker says, that's fine. It's not a problem, but we need to see some records first. And one of the critical records we need to see is your sales. We need to see your profit records, and we need to see your plan for the future. So this is, you see, these are some of the things bankers will look out for, and then sometimes we wonder why we go to the bank for loan or some financiers, and then they turn us down. We're wondering, these banks, they are not interested in SMEs, but the money they have is depositors' money. It is money that you and I or other people have put in the bank, which they are lending to the business person. And so they need to handle the money very well and ensure that records are taken. I mean, those of us in Ghana, we know about the recent incidents where some financial institutions had to be closed down, and part of it because of the management of the finances. And so as bankers, they need to see what records you have in place. Your sales, is your sales going well? Your profit, are you making profit? And what is your plan of the future? But many times we don't even pay the attention to make these records. We are quick to take the money, but we don't record the sales that we made on a daily basis and then the profits that we are experiencing. So as we go on, we see the importance. Now, there's this quotation again from the study. Managing your debt effectively and repaying your loans wisely is easier when you keep good records. I'll take that again. Managing your debt effectively and repaying your loans wisely is easier when you keep good records. So what are some of the importance or benefits you get from record keeping? You can easily monitor your overall growth of your business. You can determine whether your business is going up. That last month you sold to 20 customers. This month, as it's going, you've sold to maybe 30 customers, and how it is going. You are able to tell it. It helps you to strategize market-oriented business policies. So you would see that you know where your customers, what kind of customers purchase your product. It would give you an idea by the record keeping where your customers are coming from. And then with that kind of information, it would let you know how to plan your business and target your customers with the right strategies. You target the right markets. I mean, your customers may be, if let's say you are here in Accra, your customers may be coming from Kaswa side, but because your business is based in maybe Medina, you are thinking your customers are around Medina. But when you keep good records, you may find out that majority of your customers are coming from this other side, and then you don't know what to do to reach your customers. You're able to identify your income sources, and you track your expenses that you need to take out from the money. See, without record keeping, sometimes like the scenarios that we saw, the various expenses whereby suppliers were paid, it is an expense that needs to be taken out. Because no record, you are not able to deduct it, and then you're not able to know the profits that you're making. Decision making becomes also easier, and you're able to work more efficiently when you have good records, because you have a good overview of your business, and then you know what to do. It also allows you to attain complete regulatory compliances. You know, when you have these good records, you are not so much afraid when it comes to filing annual returns. You are not afraid when it comes to tax, media tax obligations. You are not so much afraid when any of the state obligations fall due, because you know that you have your records in place, and it is, you just present them and they will speak for how the business is done. So these are some of the reasons why we need to adhere to good record keeping. Can continue with the next slide. So what are some of the bookkeeping methods? There are various methods to bookkeeping, and we will look at some of them. Two of the main methods that are used in bookkeeping, there is the cash method or the cash accounting method, and there's the accrual basis or the accrual method. Now the cash method, it is used, and that is what happens in majority of small businesses. The income is recorded only when money is received. expenses are recorded only when money is paid out. Why small businesses tend to like this is because it is very easy to do, and it's much easier in seeing your cash flow, but it has limitations as well. This method of the cash accounting method of bookkeeping, it doesn't give you a good picture of how your business is performing. And also it makes it harder to track profitability by month. And also it makes it difficult to track receivables and payables separately. Now let me explain this. You have your customers who will come and buy products. Some would pay outright. Some would pay on credit terms. They might say pay maybe a deposit and then pay some amount later on. Now you sell the product at say 20 cedis, and then the customer pays 10 cedis now and says, I will pay the other 10 cedis at the end of the month. When you record the 10 cedis as the payment you have received, if you are not careful, later on, you will now sit back and be confused. How much did I sell the product? Did I sell it for 20 cedis or did I sell it for 10 cedis? Per your mind, you know that the product is supposed to be sold for 20 cedis, but you look in your book, what you can see is 10 cedis. So you get confused. Or if it is one of your team members, why is 10 cedis recorded? And it can be an argument. Forgetting that 10 cedis was just a deposit and there is a balance to be paid. In a cash accounting method, you tend to have that problem. And that is where you are not able to track your profitability very well, because there's the profit you made and it is not on the 10 cedis because the product is actually 20 cedis. The selling price for the product is actually 20 cedis. And then because of that, depending on how you record it, you sometimes many times forget that this customer owes me 10 cedis that they need to pay at the end of the month. So several months may pass down the line, and then you now remember, hey, there's this customer that owes us this amount. And you now need to go through a stack of files and check in, who owes me this, who owes me? And many times that happens when you realize that your business, you are hard pressed, you don't have money, and you now take your books and you start going through one by one and looking who owes me and who doesn't owe me. And you see, it becomes difficult when you're using just the cash method without proper record keeping. But the other method is accrual. And what is the difference? The accrual focuses on when the income is earned and when the expenditure is incurred, not necessarily the money that comes in or the money that goes out. So again, using the sales example, if the product is sold for 20 cedis, but the customer paid a deposit of 10 cedis, the income that you record is not 10 cedis, but you record the 20 cedis. And then you record that payments made 10 cedis, balance is 10 cedis. So that is clearer and you're able to see it very well that in this particular case, I have earned 20 cedis, but then the money I have received at this point in time is only 10 cedis with 10 cedis outstanding that I need to collect later on. And the same thing happens with expenditure when it comes to accrual method. You go when you purchase your raw material, you purchase your packaging materials that you use to package your products. And when you do, sometimes you may have a good relationship with your suppliers of the raw material or with the product packaging. And because of that good relationship, you're able to tell them and convince them that I'll make this payments now, and then at a later date, I would add up to it. Again, here in accrual method, you record the full cost of the packaging material. So let's say the packaging material costs you 200 cedis. You record your expenditure as 200 cedis. Even though at that time, you may have paid 150 Ghana cedis, promising the supplier that you would pay the remaining 50 cedis at a later date. In cash accrual, you would record only the 150 cedis, which is a mistake. because that is not how much you purchase the packaging material. But accrual helps you to see that you record the 200 cedis, which is the actual cost of the bottles or the containers that you use. But you paid 150 cedis, and then you would make the payment of the 50 cedis at the later date. So you see those things much easier. And that is why we say here that you are better able to track your business performance. You are able to track your profitability on a monthly basis better. And then you are able to see your lenders and investment. And this is preferred by lenders and investors, because they want to see a real picture of how your business is doing. So you have situations where a business is very profitable, it is doing very well, but they have very little cash at hand. Why? Because a lot of the money is either with their customers who haven't paid. Meanwhile, they have had to pay a lot to their suppliers. But the difficulty, and so why do you choose between cash or accrual? These are some things that you need to look at and discuss and decide yourself. Are you a sole proprietor or an enterprise? Are you just starting your business? Are you a small business with increasing revenue over a 3-year period? And do you have some inventory? Now we provide these as a guide. These are not rules cast in stone, but these are rules as a guide. When you are just starting a business and depending on your knowledge of bookkeeping, as the post said, many of us doing it ourselves, it might be easier to just do the cash basis. But when you're going on over a while in your business, it might be better to start migrating and changing from the cash basis onto the accrual basis. And then when you begin to purchase inventory, the materials you use for your business, your production, your raw materials and those things, then it might be good that you start changing the nature of your record keeping and your bookkeeping and move from the cash basis to accrual basis of bookkeeping. Now, another thing that we need to look at in bookkeeping, 2 different methods again. There is the single entry and there's the double entry. The single entry aligns more with the cash basis of accounting, and so it focuses more on cash transactions only. And like I explained, so it is mostly an incomplete record of your business. It's because it's that way, it's very easy to think that you're making profit, see what's your situation, profit or loss, though it is not an accurate picture, and you have a statement of affairs, and then there are several aspects of your transactions which are not recorded. But in the double entry method of bookkeeping, you have both cash and credit. This helps to see the flow of money and finances throughout your business. And so this is what is used mostly in preparing audited statements, account statements, your profit and loss statements, your balance sheet, and then also your cash flow statements, the double entry. We will see a little bit about this more as we continue in the webinar. So we can go on to so when you look at this, the bookkeeping to the left, the bookkeeping maintains a cash book. And then, so when you look at the example here, you have a balance in your account, and then you need to pay rent. The rent is recorded. Whatever balance is also is shown there. You have an invoice that somebody has paid. You make a sales, like the business here, and the sales is 500 cedis. You record it. You make supplies of furniture, and you record it. It's just as straightforward as that in the single entry. But when you come to the double entry, you see, whatever you make any payment or receive any payment, there are 2 legs of a transaction that take place. First of all, let's take you are receiving money coming in by people making sales. When the money comes in, you credit your cash account in the office that you have received this money, this amount of sales, and then debit your customer. When you make payments for your rent, for example, did you make the payment out of your bank account, or did you make the payment out of the money, the cash you had in the office? If you made it out of the cash you had in the office, you debit your cash account and then you credit the rent. And that is how it is done in the double bookkeeping. And so that gives you a very clearer picture, and it works with the balance sheet method. That is why we say that in this double entry, you have assets to be equal to your liabilities and owner's equity. We will explain these terminologies as we continue in the webinar. Now, so what are some of the records that you need to pay attention to? Your cash book. Whenever you receive money in, you need to make record of that. Your cash sales that you're making, that also needs to be adhered to. Credit, this is very important, and that we need to adhere to as small businesses, because a lot of times we lose oversight over that. Account receivables, those who are debtors, you need to note that and then record that. And payables, those that you need to make payments to, you need to pay attention and keep records of this. It might be necessary to have different records for them so that they are very distinct and they are very clear. And then whenever you purchase stocks, you purchase inventory, your raw materials, your packaging, it is good that you record this and then you keep good records of them. You see, this is one place that sometimes small businesses, we make a mistake, because you purchase maybe five containers of your packaging material. You don't record it, and then when you go and take any out, you don't record them as well. So before you are aware, you have a big order to work on. You now go for packaging material only to realize that you have run out of packaging material. But if you recorded the amount, when the quantity you purchased, and whenever you take some out, you record them, you'll be able to see when it's getting finished and know that by this time I need to order, or I need to go and purchase some more raw materials or packaging materials. And you need to record your expenditures that you are making in your business. So you can go on and we would learn a lot more. So in the cash book, just giving you an overview, you see your cash coming in, your sales daily, weekly, monthly. You need to note these ones. And then when money is going out to, you record them. So money coming in, cash coming in, cash going out. When cash is coming in, generally accounting, there are rules for doing them. But for a small business, you don't need to bother your head so much about the plus and the minus. But you just need to know that either you can simply record cash in as income, cash out as expense, so that you know the money that goes out of your business and the money that comes into your business. We'll continue, and then we'll learn some more records and bookkeeping. So your cash book and other things. So your inventory records, you keep a record of, as I explained, the physical items that your business has at any point in time. It includes what you had at the beginning of the year, what has been added to those items through purchases and production, and how much is left your business through sales, consumption, planned use, or losses. So you have good records of these inventories, and you can see what you have, what is going out, what is coming in, and you know what your business has. Your credit book, this is an example, and then your credit book showing you, so this is what the item the person purchased, the date the person purchased it, if the person made any payments, the balance, and then you get the person to sign to it, so that if in any case there's any disputes, you can show the record shows that this is it and you sign towards it. And the same continues as we go on. Again, with the debtors, again, you see it's there that this is what has happened. 5 gallons of honey purchased. This is how much it cost you with any payments that was made, and the balance. Also, the records made very clearly so that there is no ambiguity in their business. So we'll continue. And then now we'll go on to budgeting. So having had this idea of record keeping, let's see budgeting. What is budgeting? Just like many of us will be thinking, okay, what is budget? In simple terms, a budget is a plan. A budget is simply a plan. It is a financial plan set for your business for a given period of time in the future. It is a plan that you are making your business to know how you would manage your business, and you would organize and you would run things in your business. Now, let's look at the next slide and you would see something about budgeting. So in budgeting, this is one key thing that you need to note. You need to know where you are in your business as at today. Where am I now? What is the profit I am making? What are the sales I am making? What is the expense I am making? Where do I want to get in the next 2 years, in the next 3 years? Where do I want to get in the next 5 years? Then you draw a budget, you make up a budget. So I want to be able to increase my sales or customers by this quantity. And then what do I need to do? You draw the budget. And that is what will feed into the business plan. So many times, many financiers, banks or things, you have a business plan, a business proposal. There's the written part they will look at, and there's the numbers part, which is very critical and essential. And that has a lot to do with your budget. So there are these components. It would show you your finance, your fund, your cash that you have. You see the savings that you have made, your accountant, you see your stuff. The next slide will show us various components of your essential components of your budget that you should pay attention to. Budget your management. As the business owner, many times we don't pay ourselves as business owners. We don't pay ourselves a salary. We think that the business is ours. We run the business and we are the ones sweating every day. So whenever we need money, we just put our hands in the money and the cash, and then we take some out and we don't even record it. And we go to the account, we just sign a check and then bank, and then we withdraw. But in budgeting, you don't do that. You need to pay yourself something and you need to record that very well. If you have any staff you are working with, that is why we write HR and admin. You need to record, I have 2 or 3 people, I have 10 people, I have 20 I'm working with. This is how much I am paying each person, so that you know at the end of the day or the month what your staff expense is and how much you are spending. Administratively, you purchase papers, you purchase maybe internet to use at the office, you purchase some materials. Those things, you need to pay attention to them and make records of them in your budget. Production too, your production, the materials that you are purchasing for your production, the raw materials, the packaging, everything, the stuff, you need to pay attention to them and budget all these things. If you don't budget, you might not, you see that you might end up making a loss, because the price at which you are selling your product might actually be less or lower than the expenditure or the cost of your production. But when you budget all these things, items very well, you know the various components that goes into making the unit of the product, and you're better able to determine how much you should sell the product. So we continue, and there's seeing this. Now budgeting. There are generally various methods that are used in budgeting, but we want to look at 4 methods, general methods that are commonly used for budgeting. There's the incremental, there's the activity-based, there's the value proposition, and there's the zero-based method of budgeting. Now, what is the incremental method of budgeting? The incremental budgeting method is usually the simplest that everybody likes to use, because all you say is that last year I made a sale, or my business performed at this amount, so I would increase my performance by 10% or by 20%. You just determine a certain percentage or proportion by which you want to increase your business. And so that tends to be the simplest method in budgeting. That, oh, last year I spent, expenditure was 20,000 cedis. So I just budget that next year I will spend 30,000 cedis. just by a simple incremental method. And so it is very easy to use in the incremental, but it has limitations. And you know, these are things that we need to pay attention to. The first limitation is that inefficiencies that existed in the business will continue in your budget. For example, if there was a mistake that was you made in arriving at the previous year's budget, because you just use a simple incremental method, that mistake would still reflect fast on. And it is, should I say, a slack method of doing budgeting. It is a lazy way of doing budgeting because it is very easy and it ignores very important external drivers of your business. There are external things that impact on your business. That last year there were things that impacted on your business, but this year may not impact. There were things that did not impact last year. For example, last year we didn't have COVID. This year we have COVID. So if you simply say that last year my business performed this way, so I am simply increasing it by 20%, you are ignoring the effect that COVID would have on your business. And that can be a grave mistake to make budgeting. But let's look at other methods as well and see what they do. The next one is the activity-based. The activity-based determines the amount of inputs required to support the targets or outputs you set by or you have set. So you set your output, you set your target, you set what you want to achieve, and you try and you look at the various activities, the various elements that go into reaching that target or that activity or that output. And then you begin to put cost elements to them. So the cost expectation of delivering those activities, and the activities need to be that needs to be undertaken, you put costs to them. And that is why this method is called the activity-based budgeting, because you are looking at the specific activities. It's also a good method of budgeting. Now, value proposition. The good one about this is that you have the customers always in mind, or your stakeholders in mind. And you want to make sure that everything that you are doing in your business, you are making sure that you make value for your customers and then your stakeholders in your business. If it is an enterprise, you know your stakeholders. If it is a limited liability, the shareholders of the business, you want to ensure value for them. So there are things to consider in this value proposition. When you are using it, you think about this. Any item that you are putting in, why is this amount included in the budget? Is it necessary? You justify every item in it. And if the item doesn't have any real significance in the budget, then it may need to be taken out. So that is why we say that does the value of the item outweigh its cost? If not, is there another reason why this cost should be included and therefore justified as part of your budget, so that you don't add unnecessary expenses in your business and end up increasing the cost of your business? Because in these times of the COVID, marketing and then pricing of your products will become very critical and essential. And so you need to know what is going into the pricing of your products. And then the next method of budgeting is the zero-based. Now, the zero-based is one of the best methods of budgeting, and this is how it works. Your business has been running, all right. You have an idea what goes into it, the various expenditures. You have the various idea of the various income lines that you have. But then for a new budget, you assume everything is zero, that there is no expenditure at all. And you now begin to build your expenditure from the start. So here, what it does is that you need to produce 1 shea butter cream. You begin to say, start off from the fresh, at the start. I purchase the the raw share butter from the cooperative at this cost, and when I purchase it, transportation costs me this much. When it comes into my storehouse, my warehouse, I produce it by this and this method. I use this number of staff. You are costing every item as if you are starting the whole process afresh. One of the limitations is that it is usually time consuming because you are starting everything afresh. And so many companies and businesses don't use this often. But it is a good method to use when there is a need for cost containment. So when you look at the times in which we are in COVID, where there is a lot of pressure on many businesses, this is a time that you may need to pay attention to zero-based budgeting and look at your various items that you use in your business and begin to justify each of them from the scratch. Look at how your cost is built up again. Then you can see which ones are essential, which ones are not, and the ones that need to be taken out. So zero-based budgeting is one that you need to periodically pay attention to. Now, budgeting is done in various ways. And I believe that for many of us in businesses, we are not the only one running the business. We have a number of people that we are working with. And so you see different ways of doing it. Sometimes it is done a top-down. That means that you as the owner of the business or the managers are the ones who prepare the budget and simply tell the staff that you are working with is that this is our targets for the year, these are targets for the month, these are targets for the week, this is the cost that we want to try and incur. You have the one who has drawn up everything and you just put it forward to the staff. The other side is that there is the bottom up, the far end, there's the bottom up where your various staff also draw something. So for businesses that have salesperson, that may have production team and things, you say, okay, production, draw your budgets. What do you need for this month? What do you need for the week? What do you need for the year? What do you want to achieve as the sales? And then you sit down with the various sales doing and you put them together. That is the bottom up. And then in between, you have the bridge method, which is the negotiated. The top down prepares something based on your overview of the entire business, the entire landscape, the industry. And then you ask your various staff to also bring their inputs, and then you integrate the two of them. And so these are various methods that you can be using in your business. As the business is growing, you need to look at some of this. Now, components of bookkeeping, and then we'll look at here. There's the assets. As we said, we'll look at some of these terminologies. Assets are cash or resources owned by the business. What the business owns are your assets, your cash that you have. You have purchased maybe a vehicle to distribute your products or to go for the raw material. It is your assets. Your equipment that you use to manufacture your products, it is an asset to you. Your liabilities, the debts that you owe, you have gone for a loan, it is a liability for you. The interest is a liability. Your products that raw materials, or whether you have paid some, you haven't paid fully, but there is some balance to pay. Those balances are liabilities. Then your revenues or incomes, it is money that you have earned that is earned by the business, usually through sales. So that is your revenue or your income. If the person hasn't made a purchase, but just made a promise, it is not yet a revenue, so you can't record it. Your expenditures, you also need to record them, your salaries, your utilities. And then the equity, that means how much stake you have as the business owner in your business. That equity is very important. You purchased you are the one, through your own knowledge, you started the business. You purchased the raw materials, sometimes out of your own funds, not from the business. Sometimes you purchase the machinery out of your own money. They are equity that you are putting into your business. And these are essential. There are ways to handle them. And this is one area where small businesses will make a mistake because we don't pay attention to this. That is why sometimes it comes to partnerships and then we find small businesses afraid of partnerships because we think that somebody will take over our business. But meanwhile, there are a lot of things you purchase with your own money and invested in the business. And those are your equity. But because you have not recorded them, you think that you don't have any equity. And so a partner comes in, will take over the business from you. But when you record them, you might see that you have a very strong stake in your business. We'll continue with the webinar. Now, the income statement. What is the income statement? And the bottom line at the end of the bottom income statement is profitability. The aim of any business, yourself as a business person, is to make profit and to maximize profits. And this is done usually through two methods. You increase income or you reduce expenditure. The most preferred method is to increase income. But in times like this, when sometimes the ability of your customers to purchase has reduced, one key thing to do is to reduce your expenditure, and that can help you to increase your profit. For example, if you rented a business that is in export and maybe rented a shop maybe within the airport or close to the airport, but now because of the bans on flights because of the COVID, so you are not able to ship any products out, you're not making any export, and so you are not even making use of that office. See a way how you can negotiate with the owner of the place to reduce that expenditure so that you can increase your profit. And there are things to note here. Your gross profit, you look at the income you made and then directly what it cost you to make that income. The raw materials you purchased, you deduct those things out, the direct stuff that you used and the time that you used in making that product. You take that out, you get your gross margin or your gross profits. And then you have the net profits. There are other expenses. We'll look at that in the next slide. When you take it out, then you see the profit at the end of the day. Our next slide will show us these expenses and this cost. So these are your key business costs during your operation. There is the direct cost and then the indirect cost. And this is where the gross margin and then the net profits come in. The direct costs, they are dependent on your production. For example, when you are producing, you will need to purchase raw materials. So the quantity of raw materials you purchase, the packaging material, it is directly related to your production. And that is why we call it a direct cost. So the income that you made, the sales, and you take out these things, the direct operational staff, the people that you use in production, their salaries, those are direct costs. Sometimes, depending on the level of your business, you might be able to determine the utility, your electricity, water, quantity that you use in your production, direct cost. If the vehicles, your vehicle, when you go to distribute or to the product, the fuel used, it can be classified as direct cost. But there are others also which have no bearing on whether you are doing business or not. For example, you may have a security personnel, depending on the size of your business. You may have a secretary, you may have administrative person, somebody. These people are people whose work in your business is not directly related to production. And these people are indirect costs. Your office, if you go there today, you're maintaining the office, but you are not producing, you don't produce anything. Once you put on your lights, you use water, you run the electricity, there are some utilities, electricity costs you will pay, and that is an indirect. This is different from where your utility or your electricity or water is directly related to your production. Again, your rental, whether the office, you've rented it for 5 years. Well, because of COVID, you had to be on lockdown. The rent payment is not affected by your lockdown and therefore being at home. Your equipment, they will be depreciating over time and going down. The depreciation cost, it has nothing to do and no bearing with whether you made sales or not. And the interest on loans, luckily and then fortunately, a lot of the banks and financial institutions came out to say that because of the COVID, they were freezing interest on loans for a period. Otherwise, ordinarily, whether you produce or not, it has nothing to do with the interest. The bank will still say that the interest still holds. That is the normal condition. This one had to be an exceptional case. And so you need to take note of these various cost elements in your business. The ones that are directly related to your production, the ones that are not direct, and the ones that are not direct, you see how you manage them. The ones that are direct to, you see how you handle them. So you go on and see how this impacts on flow into your income statements. Now let's go to the balance sheet. Like we said, profitability. So it will give you an idea how much you own, how much you owe, and then what you have, from the balance sheet tells you how much you have invested in your business. So as you said, the assets, the liability, your cash at bank, then your sales that you have made on credit is an asset to you. So if you don't record them to be able to pursue them and collect them, you have that asset, but it is outside there. Goods that you have purchased, it is your assets to you. And then your liabilities, what you need to pay, your loans that you have taken, and then your equity, the capital that you have invested or that stands at the end of the day. So it will tell you how much your business is worth, and then it helps you see the inventory that you have, so the purchased goods that you have in your business. And when you are using this, you see that the assets must always equate with the liabilities and the equity that you have in the business. When you do your recording well, you are able to balance these and ensure that both sides are equal. When they are not equal, it shows that there's a problem that needs to be dealt with. And this is what is shown here. Your assets, the value of all which you own, and your liabilities is the value of everything which you owe. That is what you need to pay to your suppliers, the loans that you have taken, and your equity, how much your business is worth, the value of your business. And these are very important elements. So we can continue, we'll continue. And all these things that we have looked at will feed into your cash flow. So what is the cash flow? It provides you information to know whether the company would be able to pay workers and actual expenses, other expenses. Your record keeping, your budgeting, and you are preparing your income statement and things will tell you whether you have enough money to pay your workers. It would let you see your lenders, your creditors, you give them an idea whether you have money to be able to pay. So if you recall the scenario we looked at the beginning, when she went to the bank that I need money to purchase a freezer, the bank manager said, I need to see your sales. I need to see your financial records. I need to see your projection. It will tell them, you have enough cash to pay. But you say, oh, my business is profitable. Yes, it may be profitable. But like I said, your money might be out there with creditors whom you have not collected, which may mean that you don't have enough cash to pay for the loan. It would also tell investors that whether you are managing your business very well, and that if they come and they join you in the business, they put money in your business, they invest in the business, your business will do well and they would get good returns for their money. And then also, when you want to get certain businesses, as you are growing, there are some businesses that would require for your financial statements, some contracts, government contracts and others, they may request for your financial statements. Why? They want to be able to see that your business has the ability to be able to do the value of the business and that they request or they are requiring. So it is very important, the cash flow. And we'll look at some other aspects of this. Now, the cash flow, as we're saying, indicates the flow of money in and out of the business and what are the business. So this is just a little table showing you an example. So you invest 2,500 in your business, you make sales maybe month 2 of 2,000 cedis, and then your various outflows. So you made an investment to purchase some equipment of 1,000 cedis, various equipment expenditures that you made, you record them, your rent, your labor, you record all these things and you net them off, you take them out of the income. Then you see your net balance, and that net balance, whether it is positive or whether it is negative. The brackets around the balance brought forward is the balance from the previous month, and then it needs to always be added to the new month to give you a clearer picture of how your business is doing. If it is a loss, that is one of the ways in accounting that we do it. You record it with the brackets, and it shows that for that month, it was a loss that was made in the cash flow, but the cash flow was negative. That means that you need to inject more capital or you need to make more sales, and it continues the sales that you made on month-and-month basis and your various expenditures and your outflows. And then we will continue with the presentation. So in a nutshell, as we are coming to an end, bookkeeping is the process of recording and organizing a business's financial transaction. It's the process of recording and organizing a business's financial transaction. Bookkeeping is the primary way business owners can figure out that if their business is profitable. Without bookkeeping, you won't have a good idea. Keeping an eye on your numbers lets you identify financial challenges early on and address them before they blossom into full-fledged crisis. You know, the record keeping and your budgeting will let you see that I need to take various measures so that you don't end up in crisis. And bookkeeping also helps you to identify areas of profit expansion, areas that you may not have easily identified or easily noticed. It helps you see areas that you need to pay attention to be able to increase your business. Now, so with this, thank you. There's one that I wanted to touch on. Some of the common mistakes that business owners make in bookkeeping. One of the key mistakes is that bookkeeping, you see it's like the second slide, thinking it is so much work, it is tedious work, and so I'll postpone it, I put it off to another day, I'll do it later, I'll do it tomorrow, I'll do it another time, until you go 4 months down the line, 6 months down the line, and then it now becomes a big headache. You're postponing it, and so it becomes a big problem. And then also throwing away invoices, throwing away receipts, throwing away important transaction details. When you throw those things away, you are making a very big mistake that would later come back to haunt you. So those are a few mistakes that business people often make in bookkeeping. Thank you very much. I believe that we have learned a few things about bookkeeping, and so we want to hear from you, whatever areas that you may need some clarification or further understanding. If you have any questions, thank you.
Yeah, thank you very much, Kwame, for taking time to take us through such detailed presentation. Thank you very much, and also for our attendees and those who have listened, thank you for also taking time to go through with us. There's a first question, so please keep your questions coming in. So far we have 2, 1 has been answered. The slides would be shared, so after you visit the WACOMP page, the WACOMP website, wacompghana.org, you would find a presentation. By evening, it would have been edited, so you will find a presentation online. Kwame, the first question is, how do you cost time? How do you cost time?
All right, thank you for that. The answer to that question is that costing time in your business, you is looking at the various things. For example, you produce you want to produce shea butter cream, you want to look at the staff you engaged, the people you engaged. How much time did you spend in producing it? So you find that many business, if it is maybe 8 to 5, you agree with the person that by this time I'll pay you this much. If you're working half day from maybe 8 to 12, you agree with the person that based on that, I'll pay, it is a half day work that we did, and so I'll pay you that. So you have costed time based on the personnel that you used and how long you engage them and you work with them in your business to make use of them. So those are some of the ways you cost time in your business.
Okay, thank you very much. I think that I'll take it one so that you talk brief and then we can move on. The other one is, how do you calculate overheads as a startup?
All right, costing overhead as a startup. For now, thankfully, when you take electricity, for example, many of us now our meters and things are prepaid. And so you, with that, before you start any production, batch of production, you look at what amount, what your electricity balance is, for example, and then when you close, you end your production for the day, you close, you look at what the electricity balance is. And then with that, you'll be able to see that roughly this is how much electricity I consumed in producing this volume of products, of my shea butter cream, if it's my fruit juice or whatever, this is how much of electricity I consumed. If it is water, for example, that one, you may have gallons, you may have things that would indicate the volume of water that you used in that production. And so you're able to see the volume of water that you used. So your utilities, that is some of the ways you can cost those.
Yeah, thank you very much. Kwame, somebody wants to know if there's a software, there's a software for bookkeeping. And then another question as a follow-up is whether we can share a template as a guide. So the first part is, there a software that we can be used for bookkeeping? I guess as SMEs, then you should give a software that is fairly economical. Yeah, don't go for the SAPs that is beyond their means. So give us a software that is economical. And then if we can also share a template that will serve as a guide.
Yes, there are templates that available, templates that can be prepared. But I guess afterwards, when you get in touch with us, we can see about getting you some templates that can serve as a guide for you in your business. So yes, there are templates that can be used.
What about the software?
Software, yes, there are various software. As a colleague Charles mentioned, there are the high-end ones, SAP and things. Then there are some which are, I wouldn't recommend mention any. There are some which you can get free on the internet, and some that you can easily use depending on your knowledge and level of experience. There are some that you can easily use on your own, but I need to add a caution there that when you go onto the internet for any software, please be sure and check that your antivirus is working very well. Some may come with viruses, and then also when you get them, some of the few ones I have seen, you may need to do some customization because most of them that are free on the net are not developed here in Ghana, and so are developed with a foreign basis. So you might need to change maybe like the currency to reflect Ghana, CD, and some of those things. So there are various software out there that can be used.
Thank you, Kwame. Okay, Kwame, somebody wants to know, as an SME or as a sole proprietorship person, how many books should he or she use for bookkeeping?
That's an interesting question. How many books? I won't be able to tell you how many books you should use. That would depend on yourself. But it's just noting the various elements that you need to record, the various elements that you need to take note of. And so you would decide whether you want to keep separate books for them, or you may decide that maybe for two elements, you use one book for them, but you just divide them into different portions so that it makes things easier for you. That one, it depends on yourself. The most important thing is to note the various things that you need to pay attention to and record in your business.
The recommendation is that it should be as easy as possible. So you could use one book and break it into various segments so that it also becomes easier. But the temptation is that if you have several books, sometimes you may also forget how to handle them, right?
Exactly. And some may get.
Okay. So how do you handle, somebody wants to know, how does bookkeeping correlate with tax payments?
Oh, bookkeeping is essential with tax payments because without that, you know, when the tax authorities come, GRA and things, it is your bookkeeping and your records that you keep that they would use to compute and to determine your tax, that's obligations and your tax liabilities. And so when you don't have any records, and you hear small businesses complaining about this a lot, the business, they will come, they use their own method of estimation, and then they come up with a figure, and then many times it is too high, way above what you think your actual tax should be, just because you did not do proper bookkeeping. But when you have your bookkeeping, you show them the records and see that you're able to discuss with them, and then you have a good idea of your tax obligations and then your payments that need to be made. So it relates very much with tax payments.
Thank you. Well, there's another question that says, how can we handle capital items in the tax rebates we get?
Capital items, for example, maybe if you purchase a building, you purchase the land, you purchase machinery, those capital items. Those are all equity, either for the business itself, and they need to be recorded. So when you purchase them, you need to pay the invoices, the receipts for the purchase. You need to keep records of this receipt, and you record them, the date of your purchase, and you record them as assets. They become assets in your business. So your machinery has become an asset, and it increases the net worth of your business. All these are assets for you and shows that your business is growing and it's becoming stronger and stronger. And tax rebates, once you have any tax rebates on your business, these are things that become, should I say, profits for you, because you're given a tax rebate. And so you record what the actual tax element was, amount was, and then you record how much was paid, and then the rebates that you received. And then that rebate is something that now becomes extra money for you. And so you carry it on further in your business. Thank you.
Thank you, Kwame. There is one question I find very interesting. I mean, somebody has captured it as it is. The question is saying that when you begin a business, you become the driver, you become the salesperson, you become the cleaner, you become as we say in Ghana, 1 man 1,000. You end up doing all the things to set up the business. And once you find yourself in such a place, it becomes difficult to keep records. How can you advise them? How can you help them in such a situation? How can such a problem be solved? Well, you are doing everything, but you are still required. So is there a magic word? What can they do to be able to still keep records? You want to keep records.
All right, there is no magic wand to doing this. And this is where a lot of businesses, especially when starting, we find ourselves. It is true, the owner becomes everything in the business, one-man business. The only way is that you make it a discipline that you do on a daily basis. At the end of the day, before you close shop for the day, you close business for the day, whatever transpired during the day, you try and record it. As you are going on through the day, because you may need to attend to the various aspects of the business, you might not be able to do them. But before the day runs out and you close finally, at least it will still be quite fresh in your mind and you can record them. But if you leave it to the following day, then that is where the problems comes, and then it begins to, you are not too sure, hey, was it this 20 CDs, was it 30 CDs? So it is just a matter of a discipline that we need to develop as part of the various things that we do, because not doing it would cause us much trouble later on. Thank you.
Thank you. Well, somebody or a group wants to know that how do you get your accounts reconciled as a group of entrepreneurs if you want it to be audited?
Or if you need your accounts audited, you do this basic record keeping, basic bookkeeping methods, and then you call in an external accountant or auditor. They would now go through, and then they would then audit it, because per the laws, accounts need to be audited by a licensed auditor. And so when the person finishes, the person must be able to stamp it with their stamp, which would show their license number. All auditors have a license number. And so you would do this part, and it becomes very much easier. You know, we are afraid of the cost of engaging an external auditor, that these people come in very expensive. But from my experience, I have seen that when you adhere to good bookkeeping and record keeping, it makes their work very easy when they come to audit you, when you invite them. And therefore, they are willing to accept lower amounts, or they don't charge so much because your records are in place, and therefore they are able to prepare the audited accounts easily. But when you don't have the records and they now have to try and figure out everything from the scratch, that is when they say, then they want to charge you very hefty amounts that many of us become afraid of, that auditors are very expensive. It is all because of lack of proper bookkeeping and record keeping.
All right, thank you. Yes, somebody for this one is not a question, but I'm answering directly to the person. And can we have a webinar on small business startation? We'll consider it, and if we are able to do that, we'll communicate. We'll share a profile, the poster of invitation. So keep watching our various social media handles, and then we'll get there. The last question before we wrap up, Kwame, you gave different styles of budgeting, and somebody is saying that from your experience and from the Ghanaian context, having worked with SMEs, which one would you recommend?
If you are a sole proprietor, you are starting up one-man business, doing everything, the most easiest to do is the incremental budgeting, where you are just adding percentages. But our advice here, once you use that, in the course of the year, it might be essential and good to apply the activity-based, so that you cross-check and the various elements that went into arriving at the budget, to be sure that everything that you used are essential. Everything that you entered as the various budget lines, they really are justified in being there. And then at the end of the year, ending the year, every business, you see, every business, when you look at it, and the record keeping would show you this. You have your peak period and you have your lean period. The peak period, mostly when you have a lot of, the business is booming, customers are coming in. And generally you have a period where it is a bit low on sales, on activity. That may be a good time to now go and look at the zero-based budgeting, to look at, again, the budget that you prepared at the end of the beginning of the year, using the incremental method, to be sure that everything that you did was really essential and important and impactful on the business. So you can combine the various methods using the various seasons of your business. And it is your record keeping that would show you the various times that you have and which time would be the best to apply them.
Thank you very much. It's been such an insightful webinar. Kwame, thank you so much for taking us through all that we have learned today. And for me, it's been such a wonderful thing. I think that going back, we would all do whatever it takes to keep our records. And I think that the 4 key elements we talked of today before we started, the importance of having the sound financial system in place, knowing the various financial transactions, the various types of budgets, and the components of bookkeeping have been sufficiently dealt with by our resource person, Kwame. Kudos, Kwame, and thank you so much. For our attendees and those who participated, we want to assure you that, yes, beyond this is not the end. We're going to have a one-on-one coaching session. So please give your names to the various experts. Now, I try Nyako for cosmetics, Joseph Yeboah for cassava and derivatives, Frank Yeboah for fruits, mango and pineapple. You can also contact me directly. Give us your names, and then we would have a detailed schedule where Kwame would take you through. So those who are asking for the templates, those who are asking for other direct questions that you really need support, we are here to help you. Unfortunately, because of COVID and its associated risk, it will be difficult for Kwame to come to your firms. But through the power of technology, what he's delivered today tells us clearly that we are still able to reach you one-on-one on phone, and then we'll be able to help you through all these challenges. So please give your details to us, and then we'll schedule, and then we'll be able to come up to that. Again, we want to remind all our listeners that on Thursday, 2nd July, 11 a.m. sharp, we'll make a presentation on the 2nd on our subcontracting matching scheme, the second call for proposals. We'll take you through a fair idea what you have to do as networks and associations to be able to apply for the funds. Like I said, it's a 40,000 max euros, and then whatever you do, UNIDO or WACOMP will contribute 80%. And then you as the association or the businesses that are networks would also be able to fund up to or co-finance up to 20%. So get all the association executives, your secretaries, your financial secretaries, all the members involved. And it should be within these 3 value chains, our 3 main value chains: cassava derivatives and its derivatives, fruits, pineapple, mango associations, and then cosmetics and personal care product associations. And then on Friday, 3rd July, we would also come your way again, same time, 11 o'clock, 11 a.m. GMT. Would also have good manufacturing practices, a webinar on good manufacturing practices. Like we're saying, like Kwame have said, it's all about keeping records. It's all about doing the right things in our firms. So we also would need this one to go. Somebody says, how can you get our contact to link up? Maybe, please visit our website. I don't know if it would also be typed in the answer session. Just visit the answer session. You find my number, you find the number of the other experts as well, and then you would contact us. So my phone number and then the email for Kwame and the other experts would be answered live on the answer session. So you would find it there if you go there now. So we would be able to stay in touch. On this note, we would want to thank you so much again for making time to join us. Visit the WACOMP website, wacompghana.org. Follow us on Facebook, WACOMP Ghana. Follow us on Instagram, on LinkedIn, and then on our website. You'll find a lot of information there. As I said before we kicked off, this webinar will be uploaded by end of the day. It will be edited so that you have the full content with presentations there you can follow. On behalf of the WACOMP team, I want to thank my colleague Kwame Ajekum for doing justice to today's topic. We thank you for our colleagues who well helped us in the background. Thank you, Ebe Skali from Vienna, who has been a back support to us. We thank all my other colleagues, Frank, Joseph, and Na, and all the team, Mark Day, Linda, and all the team who have made this exercise a success. On behalf of the program manager, Juan Pablo, and all other team members, we thank you all for joining us. We look forward to meeting you all on Thursday, 11 a.m., and then also on Friday, 11 a.m. On that note, thank you so much, and see you all. Bye.